So I'll put a graph which captures the valuations, and since we are talking about this fear in the market, which also is enumerated with what happened in 2008, parallels are being drawn. IPO excitement, retail participation. The valuations, if one compares with 2008 and 2024, where do we stack up in accordance with the earnings growth? What are your thoughts on that?
So 2008 of course was the era of the US blow up with subprime, and then property and all those companies which otherwise would not have had access to money got it. This cycle again the US started printing post COVID, and the Chinese also continued printing post COVID. India actually had held the throttle back. If you see RBI action, both on the rupee as well as on interest rates, they have taken a very, very conservative stance, which I'm, in a way, I'm happy about that it's holding this bubble down. But I'm also unhappy, you know, my favorite topic about, you know, rupee, denying Indians the purchasing power which they should have had, denying our service exporters, which are the really value-added people, from getting their just dues, and the IT worker actually not getting his dues in the guise of, you know, what the processing guys in manufacturing are doing. But leave that aside. Earning growth in India typically is around 14-15%, and the ROEs are typically that. And therefore, our market traditionally used to peak out at 20 times and bottom out at about 12 times, which is when interest rates would fall. We are currently one standard deviation above that. But if I take the mid and small, they are at completely another level. It is true that they tend to grow faster than the larger companies, but only for limited periods of time, because eventually you're a vendor or a supplier to somebody else if you're tier 2 or 3, and it's very hard to see someone compounding and getting an ROE north of 25% on a sustained basis. Our markets have given that and much more in the last 3-4 years because it got released after COVID, but it's only caught up to trend line of 2018 when they had all crashed. So I don't think we should take the last 4-5 years as representative of what is coming. Personally, I don't think we are looking for even double-digit return from this market next year. But on a trend line, you will still make the 14-15%. And for these kind of multiples, you must have this sort of euphoria repeating at the end of the cycle. So let's say I'm taking a view today on 2030. If I think our market trades at 20-25 times even then, and we compound earnings at 15, you will basically double in the next 5 years. If the multiple goes down for some reason, because of whatever crisis may happen in the world, then you don't even make earning growth over there. Now, unfortunately, if you bought 30, 40, 50, 100 P stocks, you know, I can only wish you well, and you may have a religious experience. So let me just leave it at that. But it's not looking like a 2008 crisis from an India perspective.